Welcome back, everyone. I know it's only been about a quarter since my recent lengthy talk about Verde Agritech, but there's been a number of things that have happened, so today I'm going to be providing a bit of an update on my thinking. Now, before I begin with the same old disclosures, I own this stock. I definitely own this stock. In fact, I probably own too much of it. But that said, that's because I haven't sold any. And so lastly, even if you agree with much of what I say and you think I'm right, it doesn't mean that the stock is for everyone. So let's get to the actual video. So since sometimes I don't include something like this and I get pushback for it, Verde Agritech is a fertilizer producer. They're located in Brazil. They are in production right now and should be profitable in quarters to come. They produce a multi-nutrient, primarily potassium, so a potash replacement. And this is a very high-grade glauconite, so it's one of the highest grade deposits on Earth. Don't know about Mars, but anyway. The product is all natural, it's not overly concentrated, and it's chloride-free, which is a bonus. And they have the ability to add some nutrients for the convenience of the users. Now the asset is very large and they're currently working on growing sales in order for it to be worthwhile to expand production. For more information and trying to better understand some of the nuances of this investment idea, I really do still recommend going to the company directly to try and get more details. So now with what I wanted to discuss. Let's start with the most recent, and that is the permit. So that trading halt was quite the adventure. Anyone who was watching the implied open price probably knows what I mean by that. Anyone who wasn't, well, I guess you could sleep through a hurricane. Anyway, in the end, it was very positive news, getting a 2.5 million ton mining permit granted. That, if you remember in the past, I mentioned reasons why it might not be trading higher. And one of them that I mentioned was that they didn't yet have this permit, and I thought that could be holding them back. Now, since between the time where I said that permit might be one of the things holding them back and the time it was announced, they had moved a bit higher, and so the market obviously seemed like it was figuring that they would get that permit. Still, to me, I think that is a very big deal because it de-risks their ability to grow and their ability to get significantly higher in terms of production than their guidance for 2022, which is another thing that I'm going to talk about. Now, I'm sure a few of you are probably looking at a few of the things I said in the last video and are probably interested in how I'm thinking about it now, because I did say that a today price, and this was a few months ago now, at something that's growing, a today price could be around $5. And I also pointed at the same time to different stages of growth at what it could be worth at when it reaches those different stages of growth. Now, to start with, owing to lack of guidance at that point, owing to not having the permit, and owing to price history that I wanted to be very conservative, when I was estimating growth rates, I estimated a 50% growth rate and a 70% growth rate over a few years, and I used a margin of about $20 a ton. So my goal with those numbers was not to be overly aggressive, but to kind of reflect some of the growth that I believed we would be seeing. But what happened early this year is the company provided some guidance that was basically above the expectations I was using on every front. So to me, I think I needed to adjust my base case owing to their guidance, and they're probably having a better idea of what's going on than I do. Now, are they definitely going to hit it? No. Could they beat it? Sure. But in terms of a new base case, I think that's probably a way to look, at least in the short term. So what was their guidance? They guided for 700,000 tons of sales this year, EBITDA of around 28 million, 28.5 million almost, and earnings per share of 50 cents. And in 2023, they targeted 100% volume growth. Now, price is impossible to know, and I recognize that, but volume growth, that's very helpful. So let's look for a second at if the company achieves the guidance for this year, for 2022, what they would look like at the end of the year. So the company would have $10 million in net cash, assuming they didn't use it for some type of return. They would have paid for 150% more growth than their current capacity, and they would be growing at 100%, and let's add into that they would have the growth de-risked from a permitting perspective and from a financial perspective. Now I do want to add a few points about growth and growth spending. Most of their near and intermediate term CapEx is small and incremental. That hopefully should mean it's easier to digest, as they basically spend when they're going to need more capacity. They spend a little bit, as opposed to taking big bets that they're going to grow many times and betting a few years worth of cash flows that'll happen. So I really like the way that is structured, and they should be able to grow out of cash flow, and they also have some debt available. Also, costs are very low compared to the industry, so they should be able to weather next time prices are low, which will happen at some point, but I don't know if that's, again, relevant in a few years or a few decades. I don't know. So when I look at it at the price now at the middle of February, what I think you're paying for is, I think you're fronting about 6 months worth of success. Now, of course, that is a risk if they don't have the success, or if it happens far, far, far slower than they expect. But beyond that, what you get is optionality. Because if they succeed for those 6 months, let's call it, any growth beyond that is cheap. Now, comparing this to other instances, if you're looking at the general market, large caps, it seems to me like it's closer to 2 years, and some companies might go a bit further than that. If you could find some companies that looked, for a while at least, like you're fronting maybe 5 years of growth. Now here, the growth rate is higher than a large chunk of companies that I've seen. Now, going back to the same methodology that I used last time of fronting about 2 years of growth, and then being in a place where if the bulls are right, they make money. If the bears are right, they make money. A more reasonable price, if we assume the 28 million in 2022 of EBITDA and then approximately 56 million in 2023, 8 times that would be, as of the January 1st that we passed, $8.50, and as of December 31st of this year, up to perhaps $17, if that's the valuation that the market decides is right. Now look, at this point, that's still not my target. Just in terms of I wouldn't say it's worth that now, is what I mean, because the company still hasn't really proven how profitable it can be. Now, once we see that, I still think there's a large step forward that can be made. Now, I do have a few eventual bear cases when it comes to Verde. And the first one that I want to talk about is the price. The spot price that they base what they're selling off of is very high right now. So that will come down eventually. Now, there's reasons why it is where it is, and that's definitely helpful in the short term. But both where the spot price is along with where they have the guidance, which is I think fair for the term that they have, the amount of time that they gave the guidance for. I think both of those are higher than we'll see on a forever type of basis. But if we look at where the guidance number was for pricing, that's probably closer to what the incentive price in the industry is. So that's not necessarily ridiculous. Now, that said, I think that eventually will probably be below the incentive price because that's how things work. But in the near term, some of that will, over time, some of that will be offset by scaling, but that is a risk eventually. So you don't want to price in too much because then that eventuality becomes a risk. Also, growth rate. Trees don't grow to the sun, even if they're very well fertilized. So if you're growing at very high rates, 50, 70, 100%, then you can't grow forever. That's kind of how it works. So, maybe that's because they reached the maximum potential size that they can get to. Maybe it's because they start having trouble finding clients, finding customers. But the counter to that one, at least at this point, would be, yeah, but are you paying for it? Are you paying with the expectation that they would be able to grow forever? And for now, I would argue no. Now, I've also said in the past that the market is great at looking in a straight line. And if it really wanted to look in a straight line, as it has done with some other things, the numbers I gave could honestly get a bit more aggressive. But I don't think, for the two reasons I mentioned, along with, kind of how I think things should work rather than how they do, that's not how I look at it. I don't look at it in a straight line because I recognize that there's a few things that are tailwinds that might turn into headwinds. Might be next year, might be 2025, might be 2030, I don't know. But looking in a straight line might miss some of that. But while we're on the subject of risk, one thing that I kind of really like about this investment, particularly the way it has been priced, is let's look at what if growth slows. Like, what if they have trouble growing for one of whatever many reasons? What if they undershoot? What if the market decides it doesn't want to front them anymore? It doesn't want to expect that they're going to grow anymore. What if it starts having trouble? Well, when I look at that and I look at, okay, what could this be if it stopped growing, if it could produce what it could produce and could sell that much and couldn't really do much more? My target for that seems to be about $3. So if if 1 year out, if we vastly undershoot what's expected, and it doesn't look like they're growing nearly as fast as possible, the multiple contracts, maybe price falls, I still see some, I don't think it's worth that much less than $3 in that type of growth struggling or growth slowing scenario. Now, if you want to get really aggressive with negativity, maybe you can make it go lower, but let's say they way overshot with the estimate. I think that seems reasonable. So looking at that way, the downside from here is probably about $2-ish in that scenario, and the upside seems to me to be potentially higher. Now, I'm sure some people are probably looking at kind of some of my logic and thinking, why don't you just make a discounted cash flow model? I get it, but that's just not really how I look at things. I kind of prefer to look at things of how long do I need to be right to de-risk what I'm paying for something. And so, you could make a discounted cash flow model, but really the assumptions that you need to put in are just, you're kind of making it up as you go along anyway. So now don't get me wrong. As a bull, I am quite satisfied with where the price is right now. I don't believe expectations are too high at this price, and I also think that they have the ability, if they can execute, to prove that they're worth significantly more. While I don't think it's unreasonable to think that they could have a bit more of a premium to the current type of valuation that they're getting, I've also seen some suggestions for where the price should be now that I don't think are necessarily healthy for the stock. There are plenty of ways to imagine scenarios getting past what today might look optimistic, but what's an eventuality is reality. And if reality is a risk, that's not ideal for an investment. If reality is a reward, then that is ideal. And obviously we can't know what will happen, but there's steps to proving out what a company is worth, and I think we're somewhere in the realm of reasonable. The other thing is, I think last time I said something along the lines of, I don't think the NPV matters. I didn't mean to be too dismissive of it. I just, they're going to expand capacity at the rate that they can expand sales. And that can't be necessarily dictated by writing down a net present value on a feasibility study. And it's kind of in the way where, I can give you any target you want on this, but if growth slows, then the target just drops by a lot. If growth accelerates, the target goes up by a lot. And so, a net present value on a feasibility study will give you a number, but realistically, that, doesn't necessarily mean that much. But at the same time, you could also look at how net present value is calculated and think, okay, well, there are certain aspects like later years that are discounted, and if they can be reached either earlier, on schedule, or late, then the valuation at that point might look a little different too. And there's also different ways where they add a product, maybe the margin on backs is different and higher or something. Maybe eventually the prices can diverge from market prices, or the market price will be higher or far lower or whatever than we expect. So again, even if you did look at even if you did get the right assumptions right, the market might not care. It might just look at cash flow or earnings per share or free cash flow per share. So that's why I use what I think the valuation would be at a particular point, and kind of work backwards from there, analyze what's the risk if we fail to get there, and balance out the possibilities. So in the end, I think there's a lot of possible scenarios, and many of them are still quite bullish from here, but a lot needs to be proven along the way. And in the long term, I'd love for things to go perfectly or just go very well, and they can grow to their maximum size and then give some nice shareholder returns in terms of returning capital to shareholders in a significant portion of their cash flow, and then shareholders can diversify and invest how they want. But if they have ways of being accretive along the way, that probably also makes sense. But I think there's a lot of long-term potential here. Which leads me to say that I see potential value in a lot of time frames, short, medium, long, and while I don't think the share price necessarily deserves to be all the way there yet, I think that as it proves piece by piece, there's a lot of things that it can prove to make it show that it's worth more than today, and those will happen incrementally, hopefully, over a number of years. Now look, I recommend nobody takes my word for anything, because this is the guess. I'm guessing at what's going to happen, and what I would recommend is you guess at what's going to happen. I mean, formulate an opinion, just look at what, if this is something that's interesting and you think, okay, maybe he's right, but he's probably wrong. What do I need to think about? Well, think about, okay, well, what do you think they're going to make in 2024 beyond the scope of guidance? What do you think is going to happen? And then, don't be too aggressive. Look at different scenarios. Look at things go well, things don't go well. And then kind of think about, okay, well, if that is what's going to happen in 2024, what's it worth then? What needs to happen? What's your risk? What's your reward? And that's kind of how I look at it. But either of us, both of us, could be wrong. You never know. To conclude, and I know I've said this a number of times about this company, the future is uncertain. There's definitely still a lot of potential, but I don't know how much of it will be realized. Also, looking at the guidance and the de-risking that has taken place over the past, quarter, I guess, since I last spoke about this, the price move higher, I don't think it's not purely that it's getting more expensive. There's been some reasons that it should be higher. There's less risk. There's higher targets. And I still believe that this is an asymmetric investment at this price, but I believe that from where we are now, that patience will probably be more necessary. And while nothing in this video is investment advice, I will mention that I think a properly sized position is still worth consideration. And I'll leave it at that and say I wish everyone a great day, great weekend, great start to the new year, and until next time, see you later.